Hello everybody, welcome back to another video. Today I'm joined with Ben.
Yo.
And this is part 4 of Can I Turn My Friend into a Funded Trader? And today I'm really focusing on you, the viewers, being able to see really and tap into Ben's psychology, where he's really at with trading, what he knows. And yeah, just put it up to the test really, because of course this is part 4, but this isn't day 4, this is day 22, 23, something like that. So with the assistance of ChatGPT, I have came up with a little quiz that we're going to give Ben. There's a few different topics and there's a few different questions on each topic, and if we need to go onto the chart and have a look at that, then we will. But hopefully we'll just be able to go through it. We'll give Ben a score at the end, and then yeah, there we go. So I'm going to go on here. I'm going to copy this first question. And I'm going to... Okay, so what I'm going to do first is share this tab with you. You should see a blank document on Google Docs. Is that correct?
Yeah.
Lovely. So what I'm going to do is go on here. And the first topic, I'm literally just going to copy over. First topic is market structure and liquidity. Now, this is something, Ben, I think you would agree you're quite confident on.
Yeah.
Okay, now, this is going to be very interesting because some of these are worded slightly differently to what you would know, but I would assume, and I'd like to think you'll be able to pick it up. If not, I would just change the words and it will be easier for you, and it won't affect your score. So we'll go bang, we'll copy that, bang. Okay, first question is, what is the difference between a pullback and a true market structure shift? Okay, before we get into the first question, what I'll say, I'm going to score this. I'm going to score this quiz, and then when it's around 5 or 6 days before the 60 days are up, I'm going to do the quiz again, and hopefully Ben will get significantly better. But yeah, first question is that, Ben, do you understand that? If you don't, just tell me. I'm going to change one thing, and it's going to change the whole question for you.
I'm gonna assume that market structure shift is like breaker structure.
Okay, so
Pretty much.
if you ask me to change something, what I would have
Yeah.
done is this.
Yeah, breaker structure, yeah.
Yeah.
A pullback, I'm guessing, would just be like a pullback into a fair value gap or like a liquidity void so that it can come back for orders and then push on higher. And then a breaker structure would actually be where the candle is closing below the low, whereas the pullback will just be going to an area where there's a void of liquidity to be able to fill orders and push the market higher or lower.
Okay. So so on the answer, okay, yeah. So this is what I thought. So you were very right, but also a bit wrong. So obviously with the breaker structure, obviously you were right. A pullback. Imagine there's been a liquidity sweep. In fact, no, fuck that. I'm literally just copy the answer. Copy, bang. Okay. So this is the answer by exact. A pullback is a small retracement, and a break structure breaks a key high or low and shows a possible change in trend. So what that means basically is, let's say there's a liquidity sweep and you are looking for a break structure. Price goes down, but it doesn't quite break a structure. It just goes down, and let's say it nearly breaks structure, but it doesn't quite break structure. That's what you would call a pullback, because it's a pullback. Maybe price wants to break structure, but it hasn't broke structure. Does that make sense?
Yeah.
See, if we were on the chart, you'd see the green candles going up and up and up and up. You see the pullback, the red candle coming down, or whatever it is on your chart. But it doesn't quite break structure, but it pulls back. So you could almost see it as like resistance almost, yeah?
Yeah.
Sweet. So let's say we're scoring out of 5. You knew what you was talking about pretty much, just got it a little bit wrong. I'll say 3. Happy?
Yeah.
Cool. Right. Lovely stuff. Next question. I'll do 3 on each topic. Okay, cool. We'll do this one. This is kind of leading on perfectly from the last question. Bang. How can you tell if liquidity has just been grabbed versus if the trend is going to reverse?
If the liquidity has just been grabbed, like liquidity sweep, then yeah. Um, if the trend's going to reverse, then there'll have to be a liquidity sweep and then a break of structure. And then if liquidity has just been grabbed, it would just simply be a liquidity sweep, and then it'll either be a continuation or price will react accordingly off of that liquidity sweep.
So, in your own words, you just answered that question perfectly, I think. Let me just paste. So, if price quickly goes past a high or a low and rejects strongly, it's usually just a grab. If it breaks structure and holds, it may be a reversal. In your own words, that's exactly what you just said, I think. So, 5 points. Well done, Ben. And then we'll do one more question on market structure and liquidity. We're going to go. Okay. Okay, this is a slightly harder one. I think you should know this. Why does price often move above old highs or below old lows? This is something
Because it's constantly seeking out liquidity and orders. So buy orders and sell orders will lay above or below old highs and lows, because that's where people set their stop loss and take profits.
Yes. Yes, 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 yes. Let me copy this answer because once again, in your own words, you just said exact same thing. To grab liquidity, big players need those stops to fuel their real move. So what you said about how the market will always go and it will always try and take people out the market, take people in the market. Obviously, a big part of this strategy as well, as you know, is not just knowing how the market moves. It's also knowing why the market moves, and this is a question that identifies that massively. So, bang, right, 5 points for that. That is market structure and liquidity. Next topic is order blocks and imbalances. I think this is mad that ChatGPT's come up with this. I think it's
Yeah,
absolutely
it actually came up with a whole little quiz, bro.
yeah,
The AI
it
is
is. It's
mad.
mad. Obviously, I prompted it, but it's done it all for me. It's mad. So order blocks and imbalances. Let's give this a little one of them. So question number 1 for you, Ben, is going to be okay. This is a nice one for you. This is a nice one.
What is a fair value gap and why
Oh
does
wait,
price
hold on, hold on. Yeah,
return to
I've
it?
just done it there, but I don't know why I've done it there. But yeah, go on. You can start answering that if you want.
A fair value gap is a void where liquidity, like orders weren't filled, or where like there is a lack of liquidity, and price will want to go back to that point to be able to use that area to fill orders to change market structure or carry on with retracement.
So okay, yeah, I'm literally pasting the answer now. Once again, you literally smashed it. 5 points. Well done, Ben. See, this is giving you a bit of an idea. Ben has really been, he has been putting in the work, and it's all good and well knowing the strategy and knowing what things to look for, but also knowing, like I just said earlier, why it's going to happen, because that really helps you be able to spot things. Actually knowing why price wants to do that instead of just knowing that it does that, you need to know the reasons behind it. So yeah, now Ben's been putting in a lot of work. You lot should probably be able to tell. But yeah, there you go. All right, sweet. How can blah, 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 okay, how do you command what's the role of displacement? Okay, some of these questions on order blocks. Okay, we can do this one and then we'll have to move on. Copy. Okay. What is an order block in simple terms?
An order block, it will be the leg up or the leg down before breaker structure after a liquidity sweep. Well, it doesn't have to be, but it is just simply where orders were able to be filled to then change the trend or the market structure,
Hmm.
and price will often revert back to that area to be able to go up and fill some
Hmm.
more orders. It
So
often
you
will
actually
be.
just gave a better answer than that's what's on here, a more detailed answer. So this says the last big candle, usually opposite color, before a strong move in price. So strong move in price meaning what?
Breaker structure liquidity sweep.
Yeah, yeah. So we have the last big candle up, and then obviously the way we mark the breaker structure is after. No, sorry, the way we mark the order block is after the breaker structure, and then we do it from the point of breaker structure in line with the liquidity sweep. But yeah, you just said that in your own way. Bang. I probably, or do you know what? I'll give Dylan. I'll do a call with Dylan if I can today. I'll give him this
Yes.
seven quiz, see what he gets.
Yeah.
All right. So the other questions on ChatGPT for this are a bit weird. Like, I don't even understand most of them. So we're gonna move on to the next topic, which is time and session concepts. Okay.
Time session concepts. What, like manipulation and that?
Like what? Sorry.
Manipulation and that.
Yes. Yeah. It is. Yeah. 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 That sort of stuff, and just
Oh,
like sessions, and you should get it, man. You should get it. Be confident in yourself.
I'm confident you don't worry.
That's all good, bro. Oh, I'm gonna paste that. And bang, bang, and then get rid of that. Okay. So, question number uno. So obviously ICT traders, that's what we are.
Hmm.
Why do ICT traders focus on London and New York sessions?
Because that's where the most liquidity will lay. That's where the liquidity, or not liquidity, that's where it's most volatile price action. So, like early open on London, so probably between like 8 and 10. There's a lot of volatility
You
within the
can stop
market.
there, bro. Fuck. Hold on. There you go. You literally said the answer in the first 10 seconds. That's when the
Yeah.
most liquidity enters the market, the most clean setups are forming.
Hmm.
Exactly that. Sweet.
Even like later on into New York session, it just dies down.
What would you say is the most? There's a specific. I don't want like the number like at this time, but just tell me when is the best, like the highest, most volatile point. It's in a certain point. This is bonus points, by the way. You don't have to.
Is it New York Open,
Mm,
or is it
yes, it is, but why?
why?
Because
Because there's a crossover between New York Open and London
there you
Close.
go, there you go. Literally there. That's exactly what I was looking for. Bonus 2 points.
Yep.
Not lie, bro. You are smashing this. Fair play. All right. Let me see the next question. Why do many IC traders take traders? Day charge that's ridiculous. How can the day? Okay. Okay. This is getting interesting. Okay. Um. mm, all right. But the next question is: how can the daily high and the daily low guide your? Let's just.
In daily bias. Yeah. Because they're obviously the points, strong points of liquidity.
Mhm,
So if they're coming and they're getting swept, same with session highs and session lows,
mhm,
you can expect the market to react off of that.
mhm.
Obviously, higher time frames, hold higher power.
What does price usually want to do with highs and lows?
It'll want to go seek them out and then
Yeah,
reverse the market.
yeah, yeah. And if you were to use it like an analogy, you could say highs and lows act as what? They act as
Um,
almost. So let's say, can you see me right now?
yeah,
All right, let's say this is a high, this is a low. Price
yeah.
is doing this. What are
Don't
these?
do it. You're gonna make me say floor and ceiling,
No,
G.
no, 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 no. What it act as the word that's on here. I'm just trying to get you to say the word that's on here. It begins with M. It isn't like a trading word or anything like that. They act as. Think
Oh,
about it. If it shoots to it, it
a
gets.
magnet.
There you go.
Magnet.
There you go.
Yeah,
There you go.
price magnet.
There you go. You literally said the exact thing on there. That's exactly what I was looking for. Um, Price usually targets one or both each day, so they act as magnets. You said that. Sweet. Right, we'll do one more question on this, and then the last topic is risk and psychology, which would be an interesting one.
Mhm.
Okay, so we'll go. Okay, why do? Okay, this is a nice one to end with. We'll do this quickly. Copy. Why do many ICT traders avoid taking trades late in the day?
Because obviously, as I said with the previous answer for the ICT focusing on London and New York, a lot of liquidity will die off after the start of them sessions, a lot of the volatility. And also, the later you leave the trade, it'll be going into Asian session. The Asian session is a bit choppy, consolidates a lot sometimes,
Hmm.
and it's just not optimal to trade, to be fair.
Hmm.
It reduces your probability, I'd
Hmm.
say.
Hmm. Hmm. Okay, cool. Cool. So, okay. And if you was to put that in different words, how would you describe the moves later on in the session? You could say they're less what?
Mm, less probable. I don't know.
Yeah, close, 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 close. Probable is close.
Less prob
Less something.
less pro something.
Yeah, less prod.
Pro what, progression. I don't know.
What are we doing? What is trading? We're we're prod.
Did you
Ben, you got this, bro. I know you do. What are we doing? We're price action.
predicting price action? It's less predictable. Oh,
Liquidity dries up, spreads widen, which I don't really understand what that means, and moves are less predictable. Um, yeah, there we go. You're just looking for that one word. Um, button 4 points.
you might want to do a score on the last one as well, would you?
Oh yeah, I didn't do the answer there. Oh well, we'll just do bang. All right, cool. So the last topic is going to be risk and psychology. So okay, what? Okay, what can happen? Um, trades. Okay. This is a good question. Right, how does journaling trades help you learn ICT concepts faster?
It'll allow you to pick out the different areas where you're going wrong. If you journal everything from pair all the way down to the emotions that you felt during the trade, you'll be able to see even if you've got the win, where you can improve because obviously it's just got an actual backlog, an actual journal for you to go back and compare to.
Smashed it. Shows patterns in your mistakes and help you see what works best. You just
Yeah.
basically massively elaborated on that. And I think we will make this the last question because he's a bit choppy on it. So, what can happen? Okay. Okay. This is what we'll go with. Your last and final question, Ben, is Hold on, I'm going to elaborate.
It is important because with the strategy that we trade, we're learning how the market moves and why the market moves like that. So we're seeing a setup form. We've back tested previously. We know that the market wants to do what it wants to do. So we'll take a trade based off of them confluences, based off of everything in our trading plan being hit and executed. And then you set your take profit, your stop loss, and then obviously if you take TP1 gets hit, you move your stop loss to break even. Is just simply because if you've taken yourself out of a trade, you're moving your stop losses, it's going to mess with your psychology, and you know yourself what the market wants to do. Hence why you've put your take profit at previous areas of liquidity, previous draws on liquidity, because we know that market wants to move in that direction. So if we know that market wants to do that, why would we take ourselves out of a trade or start moving and messing with the trade? It's just going to mess with your psychology.
Smashed it. Absolutely smashed it. I just thought of a bonus point question as you was talking, but I forgot it. No, I've forgotten. But 5 points, absolutely smashed it. So overall score out of a possible 1, 2, 3, 4, 5, 6, 7. 7 times 5 is 40. Is that correct?
35.
35. See, look, but guys, look, this proves, yeah. If I could do trading, so can you, because I thought 7 times 5 was 40. There we go. Okay, so out of 35, you got 5's 6, 7, 8. Add 5's 13. 13 add 5 is 18. 18 add 5 is 23. 23 add 7 is 30. And 35. Could you drive that? 4. Oh, we've done that point thing way wrong. 39. And then 39 add 5 is 44. So altogether, 44 points. I'm just keeping note of this because I'm going to do this again with another Academy member and see if he can get better because he started at the same time as Ben. So it's a good bit of positive,
Rivalry in a way.
good bit of positive competition, rivalry, yeah, whatever you want to call it. Okay, there we go. So that is the end of today's video. Ben, do you have any questions or anything that you'd like to ask me?
No, I do not.
No. And this is where I will say, if you would like to join HM Training Academy and you would like to be doing things like this, I do things like this with everyone on board. It's just constantly tapping into people's minds, making sure they're not forgetting certain things because they're constantly having to revisit it. It's all positive. And don't forget, guys, the main reason I'm doing this because I did my journey essentially alone, completely. I didn't have anyone doing this, anyone offering to help me, anything like that whatsoever. So I've tailored this to just be exactly what I would have needed when I was at that stage. If this is something you think you would need, give me a message. I'll get you on board and we'll get you started. But apart from that, that is it from me, Ben. Would you like to say goodbye to your great, lovely fans?
See you in a bit.
All right, see you in a bit, boys and girls. Bye-bye.